Welcome to Big Picture Trading. All right, guys, welcome back to another chart talk. Hope you guys all survived the market crash of 2% on Friday. Just kidding. But yeah, we had some pretty crazy action on Friday. Again, I felt like the mom telling us to not touch the stove for the past couple weeks in the last few newsletters, just trying to highlight that caution. And the big thing on my end was just noticing, since we had this crazy run up in April, we had this gap up in May that the market has not, has bounced into and broken out phenomenally since. But the big red flag on mine was seeing how small each of these pullbacks have been in this breakout stage. So we have, little, significant, not significant, but 20-point pull in. We get this smaller 20-point pull, and then we get 10 points, one down day, one down day. Each of the pullbacks kept getting shallower and shallower, and it gets to a point that the market has to break out of that current easy trending market. And we had that last little pull in, barely one day down. Now, there really was nothing of a sell off, but 1% pull-in is not a pullback. Pullback is 5%, a correction is 10%, bear market's 20%. We're seeing these comically small intraday or 2-day pull-ins. Eventually, the dam has to break and a new trend has to emerge. So we got that, kind of warning shot on Friday, from Trump, kind of, bringing back the tariff war. But most crashes, we saw that crash back in April. That second time around doesn't have the same fear. If we think of COVID, the first few months of COVID, or most of us were probably very fearful compared to 6 months into it. So don't expect, if more tweets come out about more tariffs, don't expect another insane move because we've seen this already. We've seen what it was. We saw what happened after. We're not going to have this same dramatic effect. Sure, insane bullish and bearish engulfing candle on Friday did not look the best. The kind of middle of the range gap up today, again, not ideal. But a few chart talks ago, we were discussing, this major trend line, which I'll draw out here. And this trend line really hasn't been broken in, many, many years now. This is going back, a couple of years. Give me a second to kind of get this redrawn. But we can see this macro trend line that the market has not tested. And as we kept getting closer and closer, eventually some selling has to come into play. And if I draw this line out even further, it's not like right now resistance is at 700. But as you keep drawing this line out, eventually it'll be 800 and 900, so on and so forth. So what we need to see, if this is the short-term top, which we're going to just call 680 for now. This is the short-term top. We should expect a shift to more of a consolidation type of market like we saw, end of 2020 or, beginning of 2025. So if we do get continuation to the downside, anything really above like 600 in the SPY is pretty fair game here. So if we were to really pull in over the next couple of months and base out here, this sets up a very nice, broad macro bull flag. And then you eventually get that run up back through highs. And then we're back trying to, get back up and test wherever this resistance trend line is at that time. So can this all get taken out and we're back in all-time highs next week? Sure. But the last few weeks, we've seen some underlying weakness. We've seen some shifts from some of the sectors that we'll get into in a moment. And this pullback could be a healthy one. It doesn't have to be, the world's going to end because of it. Welcome to Big Picture Trading. We aim to teach you how to successfully swing trade in the markets while working 9 to 5. We've put together a program that we can teach you over a decade's worth of knowledge over the next 60 days at no cost. Sometimes something like this can happen. Now, obviously, we don't plan to crash or invest. The reality is we know what you're doing, that can happen. If you
you'd like to learn more on how we can help you avoid mistakes like this one here, simply click the link below, schedule a call, we'll be happy to help.
Now, the cues have been a bit stronger. They're still technically in the channel. It's as if, got the weekly here. It's as if nothing changed here. If there is a break below, this low here, then there's that confirmation that we're shifting out of the breakout stage. This is a tiny topping pattern. And then there's that breakdown stage that follows, which we're starting to see in financials. We're, kind of seeing them in a couple of sectors. So we want to keep that in the back of our mind. We've had a very easy 6 months. It can continue, but we have very significant or obvious price points to know, is the breakout continuing higher, or are we rolling over and shifting into more of a breakdown stage? So we have those key clues, and let's move on to a couple other things. So again, this gold chart is insane. I'm going to show just the volume for a moment and switch over to a weekly, and we can see again, gold is pretty much up, 100% since this macro breakout in 2024. We can see, and again, people are really hyping up gold right now, but gold has pretty much been a dead investment for, of the last 15 years, 14 years, gold has really not done much. So since 2011, gold has not really been able to break out of this level. And then the last few years, it just flagged out, got super tight, and now we're seeing that breakout move to follow. So this was, if you bought this area, you know, super impressive macro breakout, decade long setup, amazing. If you added any of these, this flags here, flag here, flag here, more power to you. But if you're buying this name up 100%, or you're buying gold up 100% right here, this is the weekly close. I'm going to zoom in some more just to show the volume. The biggest weekly volume bar that we've seen for as far back as we can go until pretty much 2022. Biggest weekly candle at the highest gold really has ever been. That doesn't really sound like smart money. It sounds like people chasing what's hot at the moment, hoping for it to continue. And it's continuing now. Maybe 400 is the new resistance level. Who knows? But if you're chasing gold recently and you got in last week, this weekly stop below 360 definitely will save you any pain when this trend changes. Again, these things go up and go up until they don't. Once that stairs up move turns into elevator down, that tune shifts very quickly. So just sticking with some of the macro stuff, again, small caps. Again, we're just showing you that big weekly setup in gold that took nearly a decade. We're seeing a 5-year long resistance level in the small caps. And just recently, it's just been extended and needs to kind of pull in to break this 5 EMA. It can pull back to 220, still be completely healthy, basically a 30-ish% retracement. But this move in time, when we get a real close above this area, we should see higher price action. But small caps have kind of just lagged, overall, but place to keep in consideration when we set up. Now we had the alert, the put call ratio alert on Friday. I pulled it down just in case we got some more continuation into the week ahead. But if you were in the chat, you got the alert on Friday right off the open where it hit. We have this red line here and when the green line up here. When we get these put call alerts at the lower end of this range, this is the time when people are super bullish. People are chasing gold. People are buying everything that's going up. But the market's super extended. This isn't the time where there's great value buys. It's more chasing buys. When we get those alerts, it's those reminders. And we got that, 9:30 off the open on Friday. And it kind of gave us that clue to, where is it? To de-risk a bit. I zoomed back too far. But anyways, so we got that alert. Again, we get the alerts on the other end up here, like we got in April. These were the times to buy when everyone's freaking out and panicking. That's the time we want to buy. We're starting to see these put call alerts getting tested to the downside. So we want to be looking to raise cash and be more defensive. Now moving on to the sectors. The semis have been on just an insane run, up pretty much 100%, almost to the T as of last week, again, like we talked about those macro resistance areas in the indexes, same hold true with the sectors. Again, tested macro resistance, perfectly, sold off, and now it's kind of inside week so far, again, start of the week. But these are not really the best times to find value in that sector. When Nvidia was hated down here 100% ago, that was the buy. All-time high break on Nvidia the past week, trades 2% higher and fades the move on Friday. So this is the time we want to be ringing the register for the most part. It's the time we want to be buying. Now, again, talking about the clues that we've seen over the last couple of weeks, that I was highlighting in the newsletter, was this breakout in utilities. Now, we talk about the retests last week. Every name was talking about why we were avoiding those retest setups, but sometimes there's exceptions to that rule. And for utilities, people were, climbing in as best as they could, and they chased through that, mini prior all-time high, and it broke it higher. But seeing this for the last couple of weeks was a bit of a red flag for the market that if people are chasing into the flight to safety sector, so much so that they're breaking through the initial retest, clearly there's some fear in the market. This is not a sector you want to see at all-time highs with the market at highs. You want to see this sector lagging the most, and that's the confirmation that the rally really wants to continue. Again, healthcare, we had that amazing week 2 weeks ago, a sick break out of the base, but again, still a weaker sector, still has a lot of room to set up and develop for that next break. So great to see that big break out of the current base. Still another base to fight with though. And we're going to skip a couple of these sectors. We're going to just focus on some of the notable ones. Again, tech still within that breakout stage. Nothing really has changed. We know the clear out. Consumer discretionaries. Again, we talked last week about a lot of these retest examples. This is a normal retest. All-time highs, sector or stock sells off, runs back to highs, and the people that were buying here that sat through this pain are typically the sellers here, and that is what creates resistance in most stocks and most sectors. That's very common to see. Utilities was the exception, ran right through it. That was that red flag that something was, cooking up under the hood. So now it has this retest, needs to pull in, set back up. Again, anything within this 340 to 400 range, it's normal price action, price discovery, and just be ready for that move, down the road, back up to that 400, probably see it go to 450 once you get that clear. Now, telecom was the first sector, again, like utilities breaking out. Telecom was one of the leading sectors in this rally. And this was one of the first sectors to break support to the downside. Again, these are all weekly charts. These aren't like daily charts. We're showing the weekly candles here. But we started to see, 2 weeks ago, telecom pulling back into that support area, which it was really hasn't done for most of this rally, and then breaking below it again. A little bit of that red flag. Utilities breaking out. Telecom, one of the leading sectors, breaking down. These were the reasons why I was being a little bit more cautious coming into the week. Same with last week, because we're seeing some of this inconsistency in the sectors. We're seeing weakness we're seeing weakness in the strong sectors. We're seeing strength in the sectors that should be weak. Just, some broad confusion, some weakness in the market when the market was overall getting very extended. Now, a sector that I'm keeping a close eye on has been the consumer staples. Again, if we do get some more volatility in the market, consumer staples is one of those safe havens. You're still going to buy toothpaste. You're still going to buy toilet paper. That's the consumer staple sector. You're going to still buy those things no matter what's going on with the economy or what's going on with the stock market. So staples has been weak the last few months because people have been chasing high beta. You've been focusing on the biotechs, the semiconductors, the mining names. That's where the money's been going. The boring, safe staples has not got the love. Now, if this weakness does continue and consumer staples has already pulled in, it's already holding up at its macro level of support. It's been holding this pretty much trend line since 2024. We got some inside weeks here. Markets selling off like crazy on Friday and staples are doing nothing. pretty much inside week for the most part at macro support. So if the market does continue to get weak, we have a very tight entry to buy up through support to be in for this macro breakout that's been setting up for the entire year. Staples have had multiple attempts this year at this breakout. It shakes that into support, and maybe it starts to get some love. So I've been definitely keeping a close eye on the staples, which we'll get into some of those names in a moment. So just moving on to some names, some individual names. Again, this Roku, we've been keeping, quite a bit of an eye on it lately, but still there is a very clear seller at this 105. We tried it through 100 up to the move to 105, but last week just could not get any real follow through it. Sold off, pretty significantly. Again, we didn't really catch much of the downside to it thanks to, break even stops. But again, now it's in this range still. The real pivot low now is kind of this 80, pivot high is 105. So macro base, just not ready just yet. So it's on the radar, but we just need to give it time to pull in and settle out before it's really ready to really break this level to the upside. So the two main names I'm in, again, still in this Tesla. Again, the real thing is just seeing that all-time high break, really just kind of flagging out here. We had that textbook entry through 360. Again, you got this like little flag here. Maybe Tesla still has to shake down through 400 before it's really ready. Who knows? But again, if you had that entry from 360, again, just sitting very patient with it, break even stop down here and letting it develop further and kind of flag out here and tighten up. Maybe earnings is the catalyst. We'll see. Again, enough of a cushion in this name to, be able to hold it through that earnings announcement. Again, if it's a gap down 10% or 20%, worst case, it's kind of break even. And my main focus for this week was this ALNY. So we got a weekly chart here, and I'll zoom into a daily in a moment, but we can just see, a nice high and tight earnings flag that's been forming, pretty much since July. So we got this nice high and tight earnings flag on the weekly. Let's switch over to a daily. Let's get that alert out of here. So on Friday, you have the market selling off like crazy to the downside, and you have ALNY actually closing the day green. Very tight little day here, very tight range, closing strong. Market is super weak. Market's selling off. People are freaking out. ALNY is closing green, closing at highs into the close when the market's closing at lows. You could not be asking for more relative strength in an extremely tight bull flag in a name that's at highs. Not much more you can ask for. So typically coming into a day like today, after Friday's action, I'd be a little bit more hands off trying to do nothing. But this ALI was setting up so tight, opened up nicely, broke out nice again, kind of faded towards the end of the day, but very tight risk here with buying 461, stop is 450, $10 risk in a $500 name. It's 2% risk. And, for now, the target for now is just the retest of this 486. And then after that, we'll see, where it can go from there. So moving on to some alerts from the past few weeks, and this NVIDIA is kind of coming back to, our price point of the entry again. Semis at major resistance, major macro resistance. NVIDIA is a big component of the semi space. It's the leader, and it's an all-time high breakout, very tactical bull flag, and just isn't getting any real follow through higher. Bunch of doji candles, bunch of indecision here. This isn't the information you want to see for the semiconductor to really break out again. AMD, a lot of these things have played a lot of catch up, but the big leader in the space isn't really showing us that they, are ready to really push higher. So again, definitely day to take notice on Friday. All-time highs closing back below the breakout level. Again, kind of just chopping around here. We'll see if, this, we'll call it 180 for now. We'll see if 180, which kind of was a resistance area, turns into support. But it's starting to feel a little bit like a topping pattern up here than the flag that's, continuing to the next breakout stage. MLM was another blue sky breakout, broke out about, a week ago. But again, just kind of chopping around, getting close to the break even level, little breakout, nothing too crazy here. Again, great chart pattern, but again, we're not seeing the love through these breakout levels, which if we're expecting this market to break out higher, we should be expecting that. Again, Polaris had that, a little 10% run up out of the base. Again, Friday's action, completely sold off and reversed that move. But again, very difficult action. 10% sell off on Friday, up 8% today, up 10% after hours. A lot of chop kind of back and forth. Now we have two of our alerts from the end of the summer that are finally starting to get stopped out. So there's GLW, again, nice tight earnings flag like we were seeing with ALNY recently. And we can see once it kind of clears that level and goes off the races. So finally broke down on Friday. This alert is now closed. If you're in it, time to take some profits in it. And also KNSA getting stopped out on Friday and today. Again, we had the nice entry to the flag, nice little, kind of consolidation, gaps up, but fading back into that range, time to take, the 10% gain and find the next name. So I'm going to go on to a couple of the member ideas and we'll run through, see if there's any setups. So again, AMD, that massive gap up last week, but again, we're still talking about those retests. Still can see that this area is acting as resistance. All-time high, gaps up, retest. And again, this week still showing, this I'm going to just call it 230, 228, still the key resistance level. Now in time, probably we'll have to see this, gap get filled below this 200 level at some point. But through this area down the road looks great, all-time high breakouts after the sector, kind of pulls in and shakes out a little bit. Let me switch back to a daily. Again, a lot of back and forth chop. Dix was down, 5-6% on Friday. Opens up, rips higher, just kind of reversing the move. A lot of knee jerk, a lot of choppy action. Friday we're idiots, Monday we're geniuses. Very tricky environment right now. And that's why, less is more. Again, last week someone had an idea for Williams Sonoma. My take was just waiting for this breakout, not trying to mess around with this wedge. And again, with the action on Friday, preceding that, you already had the break of the wedge to the downside. Friday pushes it down even further. And that's why, again, when you're this close to this all-time high breakout, sometimes it's just much easier to wait for that time. We had Datadog, we had a member buying it through 140, and then, you had that retest breakout. So it's looking good. Probably at this point, probably could raise that stop a bit more if you're still in it. Again, if it takes out Friday's low, it's going to definitely, kind of fade this up move to the downside. So definitely have the key exit if it's going to fade, if it's going to continue higher, hold the winner. Again, even some of the China names that have been on fire lately, we saw some weakness from those names as well last week. Again, Baidu pulling in from that run up. The name that I've been in for many years is Baba. Again, touched the resistance trend line of this breakout stage to the nickel and has since faded. Again, we'll see how much this thing can pull in. Realistically, this could easily fade back into 120, 130 before its next leg. So, waiting for that next ad after it kind of settles out. But, the storm is just kind of getting started in this space. But for a name like EDU, when China does wake back up, just like when the market does as well, very textbook base here, macro base, nearly a year setting up, very clear resistance, has not been able to break 56 all year to the penny, very clear seller there. So when this level is ready to break, very textbook setup there. Let's see what else we got. Again, Apple was that breakout at the retest, and what happened? failed at the retest. So really no shocker there. This is why we try to avoid these retest areas because they look amazing, but you have a big group of people here that cannot wait to say that they sold the all-time high. That just creates resistance, to the penny. The SoFi, I'm going to zoom out a bit to show the IPO high breakout setup. Again, if you go back and look at a lot of major IPOs that really got going, it's really through those IPO high areas is when they really start to wake up and avoid getting back below those levels once they really clear it. So the SoFi still setting up. Again, still technically kind of a retest area here. So you got to give it some time. For now, it's really 28. We'll just call it 30 to keep it simple. And this is more just keeping on the radar. Maybe it has to pull back into 20 before it's really ready. But eventually through that 30, that's when the name is going to be ready. Again, Oklo, no revenue, no product. Can't really get affected by tariffs if there's, nothing they're actually selling. So it had a crazy move, crazy little breakout on Friday and phenomenal continuation this week. So if you're still in it, low a day, probably low a day stop seems to be the move to keep you in for, this crazy run up. CDNS was the name we were looking for. That break through this little base again Friday got smoked, so that's going to be a big avoid for now. And again, there's definitely been a focus on this Walmart. I know Abby was asking about Walmart through this 102.50. Personally, for myself, I would be waiting for this macro breakout. Really no point, in my opinion, of getting into 102.50 where you got to give it to at least 100. So you're giving it $2.50 worth of risk. If you're giving it versus low a day, you're giving it $1.50. Again, the low of today really isn't that significant. Really, we're seeing that 100 recently has been support, for the last month or longer. So that's really the out. So buying 102, giving it $2.50, that's a pass personally for me. The few trades we got in Walmart that were very successful, barely $1 risk at support, and we got a $10 move there. We were buying this 100 versus 99. Again, dollar risk, $5 move higher. So you're seeing like with this Walmart, I'm trying to personally only give it like $1. If I can't give it $1, I'm not going to get 20 bucks out of the name. I'm not going to get $15 out of the name. It's mega cap consumer staple, So this isn't the name where I want to give it 2.5% risk. To best case, it's going to run back up to 104 resistance, and we got to still battle with that level. So I would just give this name some time. Again, the Dow 30 names have done very well. It's setting up macro wise phenomenally. It's a beautiful looking chart. For me, really, it's, if there's a trade in it for me, it's when it tests this buyback zone. Again, the market was weak on Friday. Today, gave back some of that action. We'll see if that's kind of the warning shot. And if it is, there's going to be some more downside. And that's when you want to find these, bargain buys to be prepared for the breakouts on the road. So for me, again, like the name, but don't think you need to rush into this in this big consolidation. This breakout is going to be much better to be involved with whenever this day comes than sneaking in now. And maybe it takes 2 or 3 months before it really goes. So moving on, again, last week, Martin was asking if that BK sell, kind of made sense or what he could have done better. And we could still see, again, even with the market weakness, it still hasn't broken this trend line, but it is getting close. So I'm still in the camp, with Martin that taking the profits there definitely made sense given, the action that he was seeing, before he got out. Oscar was one of these names we were talking about, last week through this 20. And again, a big reason why I dislike these cheaper names that are under $30 a share is that, you get those quick pops, you get that 10, 20% move, and then you get 30% down. So this is really showing us there's definitely still a seller here, 23.50. and already took out that low. So you got a very wide range still. Again, in time through that 23 looks amazing. But this is, this is a good example of why I do my best to avoid these cheaper names because as quickly as you get that 10% run up, just as fast you get the 20% sell off. Same thing with this RCAT. Again, I forgot who was in this, but it was, I believe they got it through 11. Again, crazy move higher, but these intraday swings are insane. You got 20% move to, you know, 10% drop to 20% up. It's like 20% moves day to day. No, I don't have the stomach to watch a 20% swing in 8 hours. If you can handle that, more power to you, but that is not my kind of cup of tea. Moving on. Let's see, PHM, nothing really to see there. And now Joe Lockhart likes this NET. Believe it's all-time highs. Yep. So all-time high bull flag. We got, support here under this 207. We got resistance 230. I believe the entry was 220. So I hope you're in it already. That would have been here. Again, I don't really see, let's zoom in a bit more. I don't really see the 220 entry. This is going to, I'll put a line for 220. So here's 220. I'll make it yellow. Don't really see the significance other than, when it was setting up for these couple of days and it broke here. If you're in it, kind of stop versus Friday's low. That's really going to be the key out for pretty much every name that's trading above Friday's low. That's going to be the sign. If we're wrong and the market's going to roll over, Friday low is going to get taken out. So if you're in it already today, you bought up versus that low, great. Stop versus 212. Again, still flagging. So you really want to see the break at 230. That's going to be kind of that blue sky breakout. So you bought enough support, you got your key out, and that's really going to be the main message with all these names. Let me delete some of these lines. For the index and for any name, really Friday's low is going to be the time to look to jump ship from the active side of things. So crazy bearish engulfing. We can see that this was support. It was still support on Friday. For now, we're technically in this flag, but we are shifting out of that clear breakout stage that we were in. Friday was confirmation of the break, closed, broke below and closed below, confirmation that this super easy breakout stage, probably the easiest one that I can recall or think of, is officially over. Friday was the official breaking of this stage. So from the break of this stage, it's pretty much there's two different choices that it can really do here. It's going to either consolidate, and for now, the consolidation is going to be between all-time highs and these lows. This can be consolidation, or like what we're seeing in like financials is the start of a breakdown stage where you see lower highs and lower lows. So like very quickly for financials, we're starting to see that breakdown stage. And we saw this same breakdown stage, earlier this year. Market was consolidating at highs. Our sector was consolidating at highs here. Couldn't get above it. Can't get above it. Can't get above it. And has to break down before it's ready to break out above it. So we saw that breakdown stage. It lasted a month. We are seeing the same thing happen again. And that's where if you can be patient, last week was week one of the pain. Maybe this week it continues. I don't think we're going to see new all-time highs this week. And if it takes a few weeks to settle out, it's not the end of the world. We had 6 months of a phenomenal market. We're seeing the market kind of cresting over, let it pull in, let it settle out, focus on staples, keep risk very tight, be extremely selective. My only trade this week, I'm fully in ALNY, 1%, 2% risk here if it fails. And just be very selective, get the watch list ready, and know you don't need to be in fully invested every single day. This is a great time to be patient and let the market settle itself out a bit. So that's really it. Again, one last thing that I forgot to mention before when we were talking about gold. I had a few people DM me about silver, if it's going to play like a kind of a catch-up trade, and I would personally avoid silver like the plague simply because gold is always the main metal that's going to trade. Silver is always going to be number two. It always has been. It always will be. So you rather focus on the leader, and you can see silver, has done nothing for 15 years, and it's finally just getting back to this retest. So if you think about 15 years of people who've really liked silver have sat through 80% losses and are finally starting to potentially see 100% gain or 40% gain or 10% gain. Like they're finally just starting to see some gains here and expect to see profit taking at this area. Does it push above it? Sure. Maybe it goes to 50, 55, whatever. But not the time to chase silver. Definitely not the time to chase gold. For the people that were chasing it last week, the out. Below 360, expect the staircase move back down. And I've been getting a lot of DMs about people that are in PLTR looking to get into it today. And this is more for like the newer traders with limited experience. They want to buy it now. Name's up 1,000%. And when you get a name that moves 1,000% in a year, very rarely, a year later, is that name higher? And if we go back to some quick examples during COVID, we had Zoom. Zoom, everyone's using Zoom. I'm doing this video on Zoom at the moment. Zoom was everywhere. This stock also went up 1,000% in 1 year. And PLTR is kind of like at this point. Like maybe it's got one last real push higher, but these 1,000% moves, if you can find me a chart that it went up 1,000% in a year and sustained it, I would love to see it because I've never seen one myself. But when you see these names run up 1,000%, most of the people want to jump in here, just like we're seeing with gold. Again, gold's not up 1,000%, but in this example, they're chasing it late when it feels the safest because it has to go higher. And that's typically when that is not the case. And again, we're still using Zoom. It's a great product, but it was not a $500 stock product. And even now, 5 years later, and it's going to be dead money until it breaks above 100. Even Peloton. Peloton was another name. During COVID, everyone's buying those bicycles. They're all towel racks now. Gets that, nearly 1,000% run up. Here it's going to 300, it's going to 400. Everyone in the world is going to have a Peloton. They can't deliver them. Stock's dead. And this stock will be dead forever. It's $2 away from penny stock. This thing's never going to see $50 a share or $80 a share. It's dead. So these are things when right here is when everyone wants to get into it. And with PLTR, everyone that's in it, congratulations. I know there's some members that are up insane amounts of money because they bought it when it got out of the S&P or when it was breaking through these bases or through any of these bull flags on the way up. But when this thing's up 1,000%, very rarely is this time different. Just like we saw with Zoom, Peloton, there's many more examples. But if you're in this name and you're up 300, 400, 500%, and you don't get a really crazy breakthrough through this 190 area, it's time to look for those places to get out when those EMAs start to roll over, when those lower highs start to form. You want to have the exit plan ready because we saw it on Friday with the market. As quickly as these things go up, once they start to turn, there is really no no looking back. And for the people that are in it that are up a lot, the big red flag is going to be the statement that you'll say is like, I'll sell it when it gets back to X. So for the people that were in like, Zoom, it's like when this happens and you get this bounce, this is when you're saying, when it gets back to here, I'm going to sell it. That's like the red flag of when, if you sit through any bit of a pull in PLTR, when that trend changes and you get that bounce here and you're saying, I'm going to sell it when it gets back to highs. That's the red flag of it's probably not going to get back there. And it's probably going to do something like this. And it's going to be slow in the beginning. And then it's going to, fastly bleed out, just like it did with Peloton. So these are just lessons we've seen 5 years ago. They're still showing us the after effects of what can happen when these things start to break lower. PLTR hasn't shown us that yet, that it can break lower, but there's only so much more these things can go after the run up that they've done in the last year. So we're going to end it there. Again, be patient, be cautious this week, very selective, and focus on the consumer staples. God, taxes are so stressful. 1099s, brokerage statements. I don't even know what that is. Oh, God. I gotta figure this out. I'm not gonna read this. If only I knew someone who did taxes. Scanner man, I'm stressed. I got 1099s, got brokerage statements. I got a menu from a Chinese food restaurant. I don't know what to do with that, but you gotta help me out, buddy.
Let me take a look. This is what you're worried about?
Stressed.
We'll handle this.
Thank God. What's it gonna cost me?
How much you make last year?
200 grand?
20% of that.
Oh God.
I'm kidding.
Now, obviously, we're not gonna charge you 20%, but everyone's tax situation is different. So what we recommend is for you to email us a copy of your most recent tax return, and then my partner Skinner here is going to do a review of your tax return and educate you on the possible tax credits you could take advantage of in the new year. Once we've done that, then we can give you an accurate quote of what we feel it will cost to properly prepare your tax return in the new year. Welcome to Tax Experts. My name is Bennett. This is my partner Skender. Throughout the year, I'll be your main point of contact, helping you organize and collect your tax documents for the new year. Once we've collected all of them, I'll be passing you over to my partner Skender,
where I'll be preparing your income tax returns and working with you to maximize your deductions and credits for the year, and also offer planning services for years to come.